Now to a consumer alert creating growing concern for California homeowners. Large home insurance providers, including Allstate and State Farm, are no longer providing new home insurance policies for customers in the Golden State. Action News South Valley reporter Eliza Navarro spoke with a local insurance agent who breaks down why the policy change is happening and what the future of Californians could look like.
Right now, it seems like daily 2 or 3 more companies are jumping ship in California.
David Peck, a local insurance agent, says in the last few weeks, a lot has changed with some of California's most prominent home insurance providers. Well-known companies like Allstate, State Farm, Farmers Insurance, and others have announced they will no longer provide home insurance for new clients, a move Peck says those agencies felt forced to make.
We all have taken major losses in the state of California due to the wildfires, not just here in the Central Valley, but all over California. We've probably had 3 of the 4 largest fires in the United States in California in the past 5 years.
Peck says companies have reached out to California's Department of Insurance asking for an increase in rates, a request that has yet to happen. With fewer insurance options and high rates for new homeowners, Peck says Californians will feel the impact.
As an agent, I don't like to see that because I'm also a consumer and I don't want to have to pay more. But who's going to take care of the insurance if the insurance companies don't?
California's Department of Insurance recently released a statement saying, in part, historically, the Department of Insurance has seen companies pause and then restart writing policies as conditions change. More than 115 insurance companies currently offer California homeowners insurance. The Department of Insurance is driven to ensure consumers have the most options to meet their insurance needs. Peck says unless change happens from state leaders, the current situation will only get worse.
I work a lot with mortgage lenders and helping them out with their clients, and they're going to be directly affected by it because if they can't get a home insurance policy for the client, they can't sell that house.
In the South Valley, Eliza Navarro, ABC 30 Action News.
I want to start off here in California because when it rains, it pours, just like the storms that we saw this year. And now that we're just a little bit closer to summer, we are learning another home insurance provider is fanning the flames. Allstate has stopped accepting new policies in California because of wildfires, among other things. So you already know we're bringing in Becca Habegger with tonight's main point.
You know, Alex, if you buy a home in California and you're looking for an insurance policy, don't look to Allstate, State Farm, or AIG. AIG got out of California's homeowners insurance market altogether, whereas Allstate and State Farm are keeping their current homeowners insurance policies, just not taking new ones. Now, for many people in the state, this is a familiar story.
We keep our property pretty well clear.
Back in 2019, I spoke with Laura and Charlie Callahan, who'd owned their home in El Dorado County for more than 25 years.
We had our homeowners insurance for over 20 years, and we got the letter, as people refer to it, and we were canceled. I'm now paying 4 times what I was paying before. It's gone from less than $1,000 a year to almost $4,000 a year.
At the time, California Insurance Commissioner Ricardo Lara was holding town hall forums, hearing from people living in the foothills who were finding their homeowners insurance policy canceled or the cost sharply increased.
So you went from $24.83 a year.
Yeah, to would be $48.85.
Wow.
Yeah.
Wow.
In other words, it won't surprise folks in the foothills and other rural, more wildfire-prone areas to hear that now State Farm, Allstate, and AIG have stopped offering new homeowners insurance policies in California, with AIG leaving the homeowners insurance market here altogether. Allstate paused new homeowners, condo, and commercial insurance policies in California last year so we can continue to protect current customers, a spokesperson told us. State Farm stopped taking new applications, including all business and personal lines property and casualty insurance, effective May 27th, the company said. The California Department of Insurance's current customers will not lose their insurance, and people are still able to renew their existing policies. State Farm added they made this decision due to historic increases in construction costs outpacing inflation, rapidly growing catastrophe exposure, and a challenging reinsurance market.
The insurance that we all never want to use, we had to rely on, and State Farm was one of the big companies that had to pay claims because that's the business they're in.
While Allstate and State Farm are now limiting operations in California, California, more than 100 companies are still offering homeowners insurance in the state, though the Department of Insurance says it depends on the home's features, its wildfire risk score, and the community in which it's located.
Some people are paying more for their homeowners insurance than they are for their mortgages.
And the thing is, this isn't.
So this is kind of a follow-up to a video that I made on June 7th regarding why insurance companies haven't changed their policy, and even speculating that there might be some sort of relief fund because insurance companies have fire investigators, typically a retired firefighter that's been on the force for 20 years who knows all the ins and outs and the technical aspects and the forensics of fire, who would be able to see the anomalies and stop payment because of the anomalies. Like when they see that the glass is melted out and they tell you, well, a car fire only reaches 1800 degrees and the glass melts at 3000 degrees, so clearly there was some sort of accelerant being used and thus we're not paying out on this fire. And they could have done that over and over and over again. And I questioned in that video why they haven't upped their rates through the roof or stopped offering fire insurance altogether. Before I move on, I just want to draw your attention to the fact that the glass is missing, the door handles are missing, and the cover for the gas tank is missing. That's a typical plasma fire burn signature. And I made that video June 7th, unbeknownst to me, just a week and a half or 2 weeks before, on May 27th, is when State Farm announced that they're pulling out of the insurance market in California. And I've heard the names of the companies: State Farm, Allstate, Farmers, and AIG, and those are the biggies.
Looking at the wildfire smoke situation, this is unbelievable. It looks like the wildfires are getting more intense instead of less intense. I've never seen anything quite like this. Canada has
now for several weeks, and you can see the wildfire smoke again making its way down into the north central plains, into Montana, North and South Dakota, Minnesota, Wisconsin, Michigan, and it's making its way across the northeastern United States. And then of course Canada is just completely engulfed in wildfire smoke and has been now for several weeks. And here's a look at the active wildfires in Canada. The red circles represent active wildfires literally from coast to coast, almost too many to count. I know it's in the hundreds. There are still many wildfires active up in Canada, as you can clearly see from the map over here at zoom.earth.
So it's a bizarre state of affairs when the general public is still unaware of the plasma fire phenomenon. The insurance companies are closing up shop in some of these areas, and Canada's on fire from coast to coast.